Good afternoon. If you're like me, you're in Europe. Good morning. If you're like Josh, you're based out of North America. Good evening, even. I know we always have some people from Asia joining us as well. Thank you so much for joining us once again to Vesper's Dairy Cafe, our bi-weekly effort attempt to keep you updated on everything that's moving in the dairy market. Well, today we'll have a special focus on specialty protein markets. And I'm very, very happy to be joined by Josh White. Josh, thank you so much for joining us.
Yeah, thanks for having me on. This will be fun.
Yeah, I really look forward to have a bit of a data-backed conversation about everything you are seeing, feeling, hearing in protein markets. You just before we went on, you reminded me that all North American teams went through in the World Cup, football, soccer, maybe. I don't know what you say these days, Josh. And that both Germany and the Netherlands are kicked out.
Yeah, I mean, this has got to be a little bit of a surprise to the world that all three North American, I think host countries typically do pretty well, right? So maybe a little bit of a little support from that standpoint. But as an American, sure enjoyed watching a pretty exciting U.S. game last night down a man. Yeah, a lot of fun. So hopefully we continue.
Well, congratulations. And we're getting a comment, and France is still in. Yes, I think France will do well. I think the Dutch are very happy to be joined by the Germans back on the plane home and not to sit there by ourselves while the Germans go through. But we'd love to have stayed in the US a bit longer. We got our first comment, which we're very happy. We also got our first question, which is not around football, but we'll. And Belgium were also reminded, well, we have an international and successful football group. But maybe first things first. I'm wearing a sweater again. I'm in Amsterdam. We had a massive heat wave last week. I believe you just turned off the fan to help with the noise a little bit. But the US is having quite a massive heat wave. What's the impact on dairy markets?
Yeah, probably too early to know exactly. So most of us are speculating on what we'll see. So most of the heat is in the eastern half of the country. And I think most of the world may not realize we really have kind of two different dairy countries here. We have everything west of the Rocky Mountains and everything east of the Rocky Mountains. And we're definitely going through some heat right now. It seems like in the western part that I mentioned, they're used to heat. It has been warm, but the nighttime temperature is cool enough for cow recovery. In the eastern half of the country, over the past few years, we've seen quite a transition to the more larger, modern style dairies. And as long as it cools off at night, cows can recover. It's very humid, and it's going to be very warm for much of the dairy producing regions in the eastern half of the country. So we do expect it to impact milk production temporarily. Talking to most of the experts, though, it really takes two heat waves to really hurt the cows enough that they don't recover. So right now we expect a dip. We do expect on-farm volumes to shrink a bit coming out of this 5 to 7 day period of very hot, humid temperatures with higher than comfortable overnight lows. But right now we're expecting a recovery from that.
Okay. So, well, there's a decent argument, I think, going around the market, whether the argument will stick. We need a little bit more heat, maybe if I read through the line there. I think the first question now, I'm going to put it on the screen. It's a rather long one, but I think this is one of the key questions, of course, we are getting as well. A little bit of a slowdown in buyer activity, a little bit of a slowdown in the increase. And I think if we keep looking month over month at prices, and I'll put them on the screen in a second, we're still seeing an increase in protein prices. I think the question, is there resistance? Are buyers slowing down? Is there a fundamental shift? Is it summer related, which is usually always seen as very much of a European argument, and everybody wants to have their buying done before they lay on the beach for a month? Is the stigma we sometimes put on that. What are you seeing there on the ground? What's happening in protein demand?
Yeah, I would echo that. It seems like there's a little bit more availability. I don't know that I've measured it as less demand. When I talk to all of our end users across it, let me back up a moment. This protein market is obviously different than we've ever experienced. And we're doing business in so many different sectors. It's no longer just about sports nutrition, bodybuilding, and things like that. It's effectively products on every aisle at the grocery store. So over the last several months, as we've been shipping a lot of product for new product development, new launches, things like that, I wonder if we experienced a little bit of a vacuum effect, filling up those pipelines. As you mentioned, we're coming into the third quarter. It's the highest quarterly price we've seen. Are we seeing the market relax a little going into the summer holiday period? Possibly. I don't think we've changed the long-term trend. And although I think for your traditional applications, the current price is absolutely resulting in exploration for substitutes and other products. I don't know. I can't confidently say that that's killing overall demand, because new demand creation has been pretty strong as well. So the best way I can evidence is I'm seeing more offers. That's a fact. I don't think we've made any material production increases in North America. So that suggests that we've had a little bit of a slowdown in pickups at the moment. But when I talk to individual companies that are buying from us and buying from others, their overall demand has not decreased year to date. It has continued to increase. I think almost every company is expecting to set records in terms of movements that I've been talking to. So we're talking about people in yogurt spaces, smoothie spaces, CPG consumer packaged good companies launching snack foods that are protein enhanced, the beverage space. So at the moment, it's a question, and I would caution the market for two things. One, if we see a price decline or we see additional availability, I would be careful to immediately assume that that's a reversal and a long-term downtrend. Absolutely could be, but these products are very expensive, and any temporary pause in shipments, I imagine every manufacturer, every processor out there is very cash conversion cycle focused, and will look to independent of their long-term outlook, will look to move those loads that are very expensive. So markets rarely move one directional. We should expect some volatility coming up. I think we can speak more about the long-term trends perhaps later, but it's absolutely a real question that many of us are trying to digest right now.
Yeah, and I think there's a lot of elements that you already mentioned that I'd love to unpack further with you throughout this episode. I think that is, of course, what caused this. And maybe we'll touch upon GLP-1 quickly as well. Try to also split it from the US narrative, the European one, but also what you said, the new demand. Who is the new consumer? What are they consuming? Where is it going? I think also the protein products that are needed for that consumer. Is it just whey? Are there other protein products already? But I think also what is the response? Do we see any creative solution? Do we see any changes there? Maybe to give a little bit of color to this conversation before we start, we'll look a little bit at where we are currently. And I believe I've shared my screen. You should be able to see it. And just to set a little bit of context, we're looking at a short-term view. But if I zoom out to a year, we've seen an explosive acceleration in protein prices, particularly 80, of course, as it became bigger. And now we see, for the first time in a while, a few weeks that might even look flat, but are still rising. Well, it went down for a little bit. I think that's the first one we've seen for a long time on our index, and then went up slightly again. We're looking at dollar per metric ton. I hope I haven't insulted you with that. I tried to find like a middle ground between our European or US viewers, but yes, currency has played quite a role as well. So looking at euros to a US market is very difficult. But also looking at European prices in dollars is difficult. So we need to go back and forth a little bit. Is this also what you're seeing after like the rapid increase that it's going up moderately now?
Yeah, for sure. I think if we reflect back a little bit, we saw the same thing with whey protein isolate last quarter, where whey protein isolate in the second quarter felt like it had stabilized. Ultimately, after such a move, there was some concerns that it would retrace and potentially move down. And now we seem to be experiencing that with WPC80. Again, a few more offers, similar to what we saw with WPI 1 quarter ago. The prices, an important part to note in the prices is the prices likely have come off a little bit, but there is such an unbelievable range right now at such high prices between manufacturers, quality, and what people need, that I would be careful to look at week over week numbers as a trend, at this moment. He who has it, may have a product that has been trading lower than others and they're moving the price down a little bit to keep inventory flowing. If we continue to see this for the entire month of July, going into August, then I would start to be a bit more alarmed about a retracement.
Yeah, that sounds fair. And as you said, spreads become bigger. We get input from both buyers and sellers, so the transactions done that week can be quite different depending on what we get reported. We're currently looking at WPI in green. If we add 80, in the past, have you always looked at the relationship between the two? And how do you look at it at the current day and also the current spread between the two?
The market certainly has, the producers certainly have, and paying attention to the price relationship, this has become quite compressed, which has led most of us that are having conversations around, well, the market must decide now, is WPI going to go up or is WPC80 going to go down? And it feels like we're currently feeling a little bit of stretching on both of those sides. The WPI prices feel like the spot availability for Q3 is pretty poor. It's hard to find offers, whereas you can for WPC80. And in terms of having a bid, I think most people have to understand what the financing and loan charges are to carry inventory. People are going to be very smart about their inventory turnover and their cash conversion cycle. At these type of prices, you're now talking, you're not talking about $200 a ton or more for most people per month to carry these products. So they don't want it to show up on their dock a day before they need it if they can avoid it. But up until now, there was some real concerns about access to supply. So it may be that we're finding a price now that has tempered our demand a bit, or we're in a seasonal window where most feel like they are adequately covered in the short run. And at the moment, some loads are becoming available, and they're those that are willing to take it right away are rewarded.
Yeah, I think that's managing the cash flow there, I think, has become one of the biggest issues, but of course the certainty to get delivery. We get another question, and we love to go all over the place, so please, Josh, hang with us, but I think already to the demand side, and I'll put it on the screen. That is the historically high WPC prices in Europe and UK. Probably works the same for US. Could be arrested if retail price and finished products reflect the cost price of the raw materials manufacturer suppliers are paying. In short, when will this inflation be passed to the end user, the consumer? And there's one chart I would love to, and I'll put it up on it's a one-off chart we made 2 weeks ago in our US weekly, and I'm gonna pull that up. Please stick with me with this live demo. Is where we made a chart, and I hope it's big enough, where we made an index of the price increase of WPI and WPC80, so the lines up here, and then the retail basket where we looked at, using Amazon, we looked at retail prices for sports nutrition, so not for the protein fortified foods, but that's the bottom line. And where we see that despite it didn't come down in 23 when whey prices came down, it remained quite stable. But if we look historically, it has not come up to the level that WPC prices have come up. So I think, based off the question that we got, we do see that the consumer is not getting fully charged for the prices that we currently see in the market. What do you expect there?
Yeah, I'm not a retail or consumer expert in this area, but the general dialogue when we have discussions are that for sure there's been margin erosion from the B2C portion of that, but there was plenty of margin to erode, has been the general thought so far. So have we moved into a point where the increased commodity prices have made it unprofitable? I don't believe so. Have most been slow to increase retail prices as a result of the commodity raw material value? Yes. And in the third quarter, there's been more and more suspicion that some have finally said, okay, we must increase prices. Where it gets complicated is when you start talking about the ingredient space, which has been a big growth area as well, where these products are being incorporated at relatively low inclusion rates for the label power. Put whey protein on the label. I mean, you see certain things that say 10 grams of protein enhanced. We're not talking about a huge amount as an ingredient, and the inclusion rates are relatively low. And many of those products are priced to the retailer on more of an annual basis. So some of that will be happening as we get into the fall for 2027. So at this point, I don't believe the consumer has realized 100% of the commodity price increase, but I don't believe they have to continue this course. And I don't think they will until we get further into a little closer to 2027.
Yeah. And if I think this is a discussion we have in the office a lot. We know that one of the reasons, but not the only reason, but one of the reasons, of course, is the growth in GLP-1 usage, which is in both Europe and the US, but US is, I think, far ahead of that. Also with accessibility. So we know that's one of the drivers. I think we've seen with cocoa where prices shot up to record levels in a way that even far surpasses whey in terms of speed. But we also see it come down, and we see demand destruction happening there. If it just gets too expensive for your bar of chocolate, people will stop eating it. But the interesting thing, I think the question, and we don't know the answer to yet, is how does this look? How does this elasticity for your consumer look in the whey space? And do they see protein as just an ingredient or just like a luxury, as a treat? Or do they see it as like a medical necessity at the moment, especially on the GLP-1 discussion there? And I think that's an interesting one that we don't know how it will behave. It's new. We're in new territory, I think, with all this new demand. And this is really interesting, but it would be the quickest way if you compare it to, if you look at supply and demand, for demand to be destroyed by it becoming too expensive. But we're not seeing it yet, I believe, with the current consumer.
Yeah, so maybe I'll get 3 reactions. I'll start with, I think we as an industry need to realize that we're going through one of the most significant demand shifts that we've experienced in decades. This protein movement is real. That's forcing us, or allowing us, because of the quality of our product, to participate in the food industry growth and the beverage industry, not just the dairy industry. So our products are going into so many new applications now that our ability to look at historical demand responses to price movements is becoming less relevant. We're entering into a beverage space that is arguably 2.5 or 3 times larger than the total dairy space. So we're an ingredient now in many of these applications, backed by years of science and research. Yeah, and this isn't just a whey story. We're experiencing this through a lot of our beverages as well, through the ultra-filtrated products that are being offered, protein enhanced, even protein enhanced milk products, coffees, everything along those lines. So it's a big shift, and I think many of us are struggling to really understand just how big that new demand creation is. So if the argument or the question is, do we have demand destruction at these prices? Absolutely. But do we have more new demand creation that's more than offsetting this destruction? And that's the larger question and the more difficult one to answer. And up until now, it sure feels like it. I would say one of the downside factors that could be coming along with that is, when you are creating this new demand, you are launching new products, you are filling pipelines, and that does create a vacuum effect that normalizes over time. Where we are in that curve, I don't know. To remark on GLP-1, I think it's really important that we all step back a bit as well. GLP-1 is a catalyst. It didn't create this trend. We're seeing this health and wellness trend globally. The US might be, one of the leaders in that, and Europe as well. But we receive inquiries on a daily basis from all over the developing world as well. So the GLP-1 catalyst has allowed our markets to maybe move a bit quicker and move a bit faster. But this is a global food trend, not just a dairy trend.
Yeah, I think the good thing about having so many people join us live is that we don't even need to think of a plan, because we're being guided to where we wanted to go as well. And I think that's the next question. Okay, we know the problem. We know what's happening, or see it as a problem. Maybe some people don't see it as a problem, but we know what happened. But we know the catalyst effect of GLP-1, new demand. But what happens? What are the short-term solutions? The long-term solution is to keep creating more supply until you find a new balance. I think the short term is also, I see a question about reformulation, alternative protein sales. I see a comment about plant-based proteins. I think this is a thing we can unpack maybe together. The first step is, I think, the MPC question, which I will put on the screen quickly. for you to read while I share my screen. If it wants to go on the screen, maybe it does not want to go on the screen. In that case, I will just read it. That's the question. Given MPCs growing relevance, reformulations, lower costs, etc., in the protein space, do you think we will eventually see it trade as its own independent market, or do you believe it will remain tethered to the non-fat pricing as it historically has?
Yeah, great question. We've sent more MPC samples out over the last few months than I have in my career. So the remark that people are looking at MPCs as a substitute for some space that WPCs traditionally dominated is absolutely true. It drives a really interesting question, because to ultimately produce more WPCs, we don't put new WPC plants in. We have to build very expensive cheese plants to get to the co-product of whey protein. To respond to demand signals on the MPC side, it's much more direct. We can put equipment into existing facilities to make MPCs. Do I think it'll detether? In ways, I kind of hope not. In ways, I think that one of the big advantages to allow markets to mature in a disciplined fashion that the milk proteins have over the WPCs is that you can hedge. You can use risk management tools to give customers what they're asking for. They're asking for forward prices so that they can price out their CPG customers for the next year, doing things that is very, very difficult in the whey protein space, which prices quarterly. I think it's a real advantage in the milk protein space. Will it appreciate in its basis value? It sure feels like it. I mean, traditionally in the US, we trade a multiple of non-fat for baseline applications that MPC 70 might go to in cheese making, processed cheese, and other things. MPC 85 is being looked at in the nutritional space as a WPC 80 substitute. And if you compare the non-fat dry milk per unit protein value with the WPC 80 or WPI, there is a lot of room for growth. Like, there's a lot of room for incremental value for MPCs. So do they de-link? I don't think completely. Do we see much more basis appreciation and or volatility? I do.
And making the risk management part of it, of course, a lot harder if they do decouple it. What we have seen and tracked from the market is, and I did a little trick, and please excuse both lines to be slightly green, but what you're going to see is the bottom line is what MPC 85 would be based on the historic multiples, so 3.28. It was an average. I know there's slightly different ones. And this is then the actual 85 price that we see. So at least we see a different pace. It's not going to move exactly in the same week. I think that's number one. And what curiously we have seen that if I plot 70, 85, and 90, we have all three of them. That 90 seems not to want to go down in a similar fashion as the other two. So there is some interesting things. And I do think in any given week, it does really make sense to look at a benchmark with how a non-fat has moved over just going for the multiple. And that's maybe the same as in the past. You could do a proxy on whey, which you also has become very, very difficult to do at the moment. I think it then continues the question more versus towards plant-based proteins, which might not be your main ingredient, Josh. But is there anything you hear from the market about reformulations towards plant-based?
Not as much as I would have thought. So if we rewind a few years, plant-based proteins were an important topic. A year ago at all the trade shows, it was protein. This year, interestingly enough, we've seen more creatine. The consumer's educating themselves. And I think we have to understand that the way information passes and moves is far different than it's ever been before, particularly as it relates to social media. And the consumer is figuring this out as well. So it's not just us bringing our science and our products and to the consumer. It's the consumer deciding what they want, and that's evolving fairly rapidly. And I think that's one thing dairy, period, has going for it. We have clinical research and decades of information that support this as a highly nutritional ingredient. Dairy protein is what we saw for fiber in the 90s or plant-based in the early 2010s. The difference is we have decades of science. So it feels more like a trend and not a fad going forward.
Yeah, but of course, I think any trend that keeps its catalyst, where a GLP-1 might be a catalyst for for dairy-based proteins, that dairy-based protein pricing might be a catalyst for plant-based proteins. It is an interesting thing. And if I look at our users, Vesper's users, we do hear more and more of the question. And not necessarily because they're already buying it, but also because people are looking at, hey, what if I recreate this? What if I try this out? What if I see how the cost model looks, how the picture look, how does it look historically? How is it projected to look in the coming 12 months? We do see an increase in interest, but maybe for people not even buying it yet, but at least wanting to know, hey, how would it change? But I think the counter argument you've just made is one we hear a lot, of course, as well. If we look at whey proteins and if we look at the alternatives, it's always very easy to say, okay, hey, WPI is 90% protein and MPI has a 90% protein as well. Well, let's just swap it around and we have an Excel reality where things work. If we look at the real world between the different types of proteins, how difficult is it and how much can you actually exchange?
It's going to vary a lot by application. Whey protein has a tremendous amount of research and applications behind it, so it's very versatile, and people know many different applications know that it works. To many others, the milk protein isolates and milk protein market is a new entry, and it's and it doesn't carry the label power presently that the whey complex does. But when you start looking at some functional applications, there's many applications using whey products that maybe would benefit or even perform better with milk proteins and vice versa. So similar to how we've mentioned that the consumer's self-educating and trying to learn what they're looking for, the customer that is consumer facing is spending a lot of money researching and exploring different solutions to their needs. So bar companies, for instance, have been requesting caseins, caseinates, MPCs as substitutes for whey proteins. We continue to see it throughout all of the different applications. What's most interesting about it is, again, if you go back a decade, we were singularly focused on the sports nutrition, health and wellness sector, and now we're having to pay attention and respond to our customer needs again on every major product in every dairy in every aisle at the grocery store. So it's changing and we're all trying to adapt quickly.
So what you're saying is that the customer you had 10 years ago, well, I hope you still have them. That's always a good sign. But there's also a lot of different types of companies that you would not have seen as a customer, not seen as maybe even a prospect in your business to sell to. There's a different consumer now, or different for you guys as well.
Agreed. And I would also remark as it relates to MPCs price relationship to WPCs, many of these product trials are underway. So we're talking about a relatively long sales cycle in these products that are consumer facing. We are now a couple years into a pretty healthy whey protein movement, but this year in particular, the prices have reached points where people are willing to explore some alternatives. As I mentioned earlier, what's unclear to me, and I think the market is the new demand creation equaling for whey proteins in particular, outpacing, or less than the demand lost to substitution and reformulation, both within and outside of the dairy industry.
Yeah, I think that's a clear one. And we always call this the $1 million question. Oh, maybe there's one we can add because it follows up on your remark. And it's purely based on the supply side of 80 and WPI. How much do you know of incremental capacity? So regardless of the demand side that is currently being developed, and how much, of course, is directly tied to cheese production, and how much untapped waste stream or processing capacity still exists in the market?
Yeah, we commented on it a bit earlier in the sense that we have to remember to get the incremental whey, the most obvious path is to build a cheese facility. Those are very, very expensive. And the US, I thought, did an amazing job of investing in a lot of new cheese processing capacity over the last several years. That capacity is not yet at 100%. So we are still filling some of that capacity, which will result in some incremental whey protein production. Milk protein investments aren't happening necessarily as obviously in the powder space. We're seeing a lot of investment in the US in ultrafiltration, UF products to meet some of the RTD and beverage demand. That's growing at a pretty interesting rate with new launches scheduled throughout the remainder of 2026. In terms of future investment, mean, we grew a lot. I think that you saw WPI over the last 4 or 5 years. We're making like 4,000 tons a month more. I want to say it's even higher for WPC80. We've seen a lot of investment over the last several years in terms of our new facilities, new large cheese facilities scheduled to open up in the next 24 months. I think we'll see some yield and some improvement, and we'll maximize what we have. But that large investment, that surge in investment had been made, and we're currently in the process of filling up those plants now. So I don't know of any major shifting supply that's going to saturate today's market upcoming in the next 24 months.
And it also means that for the cheese market, well, it's a whole new webinar we need to do. That it also means that the US all of a sudden from a domestic market becomes, needs to be quite a good and aggressive exporter if they want to also keep the balance of the cheese stocks in check.
Undoubtedly.
Yeah. I'm going to end up with a question which I know you can't, or I assume you can't answer, but I'm going to end up with it anyway, because we always call this the $1 million question. Well, now it's quite literally the $1 million question. That is, of course, given current market conditions, at what point do we anticipate seeing price softening, both for WPC and WPI? And what would be, and maybe the second part is the easier one, what would be the primary catalyst driving that correction to comment on?
Yeah, I think that what would drive a correction, should we expect some type of correction? As I mentioned earlier, markets do not move in straight lines. This is not going to continue to move in this direction into perpetuity. We're going to see a bit of a price correction, and we might be on the cusp of seeing that presently. How steep that correction is really the question. What do we define as a correction? What drives it, I think, is interesting, because I think we started the discussion really on this. We're trying to identify if incremental offers, additional offers in the WPC80 space suggests an oversupply relative to the current demand, or if we're seeing seasonal lulls and pauses. And it could be all of that. I think if we start to stack all of this together, if we get into the summer season, buyers are out of the office, they had been panicking for the first 2 quarters, got adequate inventory built to assure that they don't run out at the facility. They've seen now that the market isn't really moving higher every single day, so they're a little bit more relaxed and patient. Does that result in the market relaxing a little bit, even though the long-term trend will more than absorb the supply? And I think we might be feeling that a little bit. The question is, where do people step back in and start to buy? Is that a timeline or is it a price? And I think that the answer's within both of those. If you tried to convince someone to buy a lot of extra product and build inventory for the rest of the year at $500,000 or more per load of these high protein products, that's pretty. Now we're not talking about a commercial decision. We're talking about a financial decision. And I believe that's what the market's experiencing right now. Is we seem to have supplied what's needed today. We know new product development's happening and more is likely to be needed tomorrow. But at the moment, it seems like you can get product if you need it. And most will not likely want extra loads in inventory because of the financial cost of doing so.
Josh, I want to thank you so much. You've been so generous with your time, with your perspective on the market, with answering all of these questions. It's so great to have you back. The first person to make his second appearance on the show. So, and we'd love to have you back in the future as well. It's always great to speak to you. I know you are a active person on LinkedIn as well, and I know I enjoy following you along also for the vlogs on your daily outing. So I'll keep that in mind when I keep following you. Is there any place we can find you in the flesh in the coming months?
We as TC Jacoby will be at a lot of shows. IFT is coming up. We'll have some members there. We'll be at Supply Side Global, of course, all the ADPI events. So hope to see people and meet people. And thanks for the invitation to be on Dairy Cafe is a must watch. So appreciate it.
Thank you so much. And thank you all for joining us. See you in 2 weeks' time.